All right, so ever wish that spare room could work a little harder? Maybe earn its keep and chip in for a holiday or two?
Well, you're in the right place because today we're diving deep into exactly that.
We're tackling the UK's rent-a-room scheme.
And you know what?
What's that?
You sent us a whole stack of HMRC manuals on this.
We did.
So we've gone through all that jargon to bring you the need-to-know info.
The good stuff.
Yeah, and actually you'll find these HMRC manuals surprisingly useful.
Okay.
Because they lay out some pretty clever ways that you can come out ahead,
Yeah.
It's not just about renting a room, it's about doing it smartly.
Exactly. And here's the best part. This scheme isn't just for homeowners.
Right.
Even if you're renting your own place, you can get in on the action too. So let's break it down. What is the rent-a-room scheme?
So in a nutshell, this scheme lets you earn money from renting out a furnished room in your home. And here's the best part, without the tax man taking a cut.
Okay.
Well, up to a certain limit, of course.
There's always a limit.
There is. So what's that magic number we need to remember?
7,500 pounds.
Okay, 7,500 pounds.
Got it. That's the gross income limit.
That's right, for a tax-free ride.
And we're talking gross receipts here.
Yes, so that includes not just the rent itself, but any little extras you're bringing in.
Like what? Give me an example.
Like meals, laundry service, you name it. Anything extra on top of the rent.
Okay.
Now, here's where it gets a little bit interesting.
Okay.
Even if you're not, pulling in the full 7,500 pounds.
Right.
You might actually choose to be taxed.
Hold on. Why would anybody choose to pay taxes when they don't have to? I don't get it.
Okay, so think about it this way. Let's say you went all out, did a little room makeover to impress your guests.
Yeah.
Brand new bed, fancy decor, the works.
Okay.
But this year, those expenses, they kind of ate into your rental income a bit.
They do add up.
They do.
Yeah.
So by opting to be taxed, you can actually use those losses to reduce the tax you owe on your other income, say your regular salary.
Okay.
So those losses can actually work in your favor.
So you're saying I could tell the tax man, like, hey, remember those fancy throw pillows I bought? Business expense, write it off.
Exactly. And those business expenses can be a lifesaver come tax time. So even if you're way under that 7,500 pounds, it might actually be worth crunching those numbers and seeing if opting to be taxed could save you a bit of money down the line, especially if you've, spent a bit sprucing up that spare room.
Okay, so let's say our awesome side hustle is bringing in more than 7,500 pounds. What happens then? Does the tax man come knocking?
That's where the rent-a-room scheme really shines, actually. It gives you options, 2 different ways to calculate your tax liability.
Okay, lay it on me. What are my choices?
We've got Method A and Method B.
Method A and Method B sounds a little bit technical, doesn't it?
It does. A bit like a secret code, but it's not as complicated as it sounds, I promise.
Oh, good to know.
So Method A, that's your classic way of figuring out how much income tax you owe. You basically add up all your rental income, and then you deduct all of your allowable expenses.
Okay, allowable expenses. Give me some examples. What are we talking about here?
So we're talking the new bed you bought, those fluffy new towels, maybe even a fresh coat of paint for the room, all those things you do to make it nice for your guests, and whatever profit you have left over after you subtract those expenses, that's what gets taxed.
Okay, so it's the straightforward route. Method A. Got it. Now, what about Method B?
All right, so Method B, this is where it gets a little more relaxed, a bit more laid back, instead of tracking every single expense down to the penny.
Because who really keeps all those receipts, right?
Exactly. So with Method B, you just take your total rental income and you lop off a cool 7,500 pounds. That's your tax-free allowance. Whatever's left over is what you'll pay tax on. So if your expenses are, say, pretty low, this can be a really good deal.
So if you haven't gone crazy renovating or anything, Method B might be the way to go.
Exactly. Now, the HMRC manual actually gives us some really useful examples.
Oh, good.
To help us see how this works in practice.
Yeah, because those HMRC manuals, they're not exactly what I would call light reading.
They are not exactly page turners.
Definitely not bedtime stories. All right, hit me with an example.
So let's talk about Leonardo. Leonardo rents out a room for, let's say, 200 pounds a week. And he throws in those bills on top for an extra, we'll say, 200 pounds a year. So he's making, roughly 9,000 pounds. But because his expenses are quite high, even though he's making a decent amount, Method A actually works out better for him.
Got it. So he's better off tracking all those expenses. What about someone with lower expenses who would Method B be good for?
So let's say we've got Florence. Florence is also charging 200 pounds a week, but she's not bothering with the whole bills included thing. Her expenses are way lower. Method B is going to be the winner for her, hands down.
Okay, so it's all about figuring out which method is going to, keep more money in your pocket at the end of the day.
Absolutely. And the beauty of this whole thing is that you can actually choose which method you use every year. So you can bounce
Yeah.
between method A and method B depending on what your situation is. The key is make sure you meet those deadlines.
Right, those pesky deadlines. We'll be sure to give those to you later on, so don't worry about that. But okay, this has all been super helpful. But what happens if you're, say, sharing your home with someone else who also wants to rent out a room? Do you have to, like, fight over that 7,500 pounds allowance?
Oh, now that is a great question. Sharing is caring and all, but when it comes to taxes,
Things get complicated.
things can get a little complicated. So that nice, generous 7,500-pound threshold, when you're sharing with someone else who's also renting out a room, you've got to split it.
Split it right down the middle.
Right down the middle. So each of you only gets 3,750 pounds of that sweet, sweet tax-free goodness.
Okay, so if you're splitting that allowance, it could disappear pretty quickly. I'm starting to see why those HMRC manuals are so important. Now, I remember reading about Judy, Pat, and Josephine, the three sisters, right? They were a good example of how this whole shared housing thing works.
Oh, yes. Judy, Pat, and Josephine. A classic example. They all live together, each renting out a room. But here's the kicker. Only one of them actually gets to use the rent-a-room scheme.
Why? What happened? Did the other two forget to fill out a form or something?
No, nothing like that. It all comes down to that golden rule, the main residence rule. You see, for Judy and Josephine, the shared house isn't their primary residence. It might be temporary, or maybe they've got another place they call home base. But for Pat, this shared house, this is it, her one and only. So she's the one who gets to enjoy all the perks of the rent-a-room scheme.
So, even though they're under the same roof, their individual circumstances totally change whether they qualify. The details really do matter.
It's all in the details. Now, we've been using this term relevant sums, and I think it might be helpful to clarify exactly what that means in the context of the rent-a-room scheme.
Yeah, let's break that down a bit. When we say relevant sums, what exactly are we talking about? Is it just the rent, or is there more to it?
Great question. So relevant sums includes any income you get from renting out that furnished accommodation in your main residence. So it's not just the rent, it's any extras you're charging.
Like those cleaning fees some people charge.
Exactly. Or laundry services, maybe you're providing meals. It all adds up.
So if you're going above and beyond for your guests, you get credit for that.
Exactly. However, and this is a big however, this only applies if you are renting out a furnished space.
Right, so no trying to rent out that spare room as a storage locker. The HMRC is too clever for that.
They've seen it all. Well, yeah, make sure it's a genuine, livable space and you're good to go. Okay, so we've talked about the threshold, the two ways to calculate your tax, and even what happens in shared housing. But what happens if, despite your best efforts, you end up losing money on the deal? Can you claim losses made under the rent-a-room scheme?
Because let's face it, sometimes things don't quite go according to plan.
That's life, right. And the good news is, yes, you can potentially claim those losses.
Okay, phew, that's a relief. But there are always a few caveats when it comes to taxes, right? There always are, aren't there? So tell me, what are the catches when it comes to claiming losses under this scheme?
Well, it all hinges on whether you were exempt from tax to begin with, or if you chose to be taxed, even though you were below that 7,500-pound mark.
Right. Because we talked about how sometimes that can be the smarter move, even if it sounds a bit counterintuitive.
Exactly. So let's say you were cruising along under the threshold, decided not to be taxed, and then, surprise, unexpected expenses hit.
Oh, that's never fun.
Not fun at all. And in this case, those losses, well, they'd basically be stuck in that tax year. You wouldn't be able to use them to offset other income, unfortunately.
So it's a bit of a gamble then, isn't it? If you're confident about staying under the limit, you might as well just write it out. But if you're worried about potential losses down the line, opting to be taxed could be that safety net.
Now you're thinking strategically. It's all about weighing those options and figuring out what works best for your situation. And the good news is, if you were already over the threshold, or you chose to be taxed and used method A or B, remember those, you've actually got options for those losses. You can use them to offset other property income you might have. Spread the wealth, as they say.
So those rent-a-room losses could come in handy for someone with a whole property portfolio. That's pretty neat.
It is. And if those losses are feeling a bit neglected, you can even carry them forward to future tax years.
Wow, so the losses get to time trial. I like it. But this is definitely where having that HMRC manual by your side, or even better, a tax advisor on speed dial, becomes invaluable.
Couldn't agree more. It's
Yeah.
always best to get personalized advice because everyone's situation is unique, right?
Absolutely. Okay, before we wrap up our deep dive into this whole rent-a-room world, there's one last thing I wanted to touch on. What happens if I decide to embrace the digital nomad life and rent out my entire UK home while I'm off traveling the world?
The dream. Working remotely from a beach somewhere exotic while your UK property earns its keep.
Exactly. Sounds idyllic, but can I still benefit from the rent-a-room scheme if I'm not actually, well, living in the UK?
That's where things can get a little tricky, unfortunately. The HMRC is quite particular about that whole main residence rule. If you decide to rent out your entire place while you're living it up abroad, it's unlikely you'll qualify for the scheme because technically it wouldn't be your primary residence anymore. The HMRC manual actually uses Judah and his cottage to illustrate this very point. Remember him.
Oh, right, Judah and his cottage. So if you're gone for an extended period, the HMRC might raise an eyebrow.
Exactly. In Judah's case, he was initially sent abroad for work for like 2, maybe 3 years, and he decided to rent out his whole cottage while he was gone. No rent-a-room relief for him. However, let's say he was going on shorter business trips abroad, but still considered that cottage his main home, renting out a room just while he was away. Well, in that case, he'd be all good.
So it's not just about being physically present in the UK. It's about whether the property is genuinely your home base, even if you're out of the country for a bit.
You've got it.
Yeah.
It's all about those subtle but very important distinctions. So the moral of the story is, if you're planning on jetting off while renting out your UK property, don't just assume anything.
Right. Don't just wing it. Do your research, check those HMRC manuals, maybe even chat with a tax advisor just to be on the safe side.
Exactly. It's always better to be safe than sorry, especially when it comes to taxes.
Couldn't agree more. Well, we've certainly covered a lot of ground today, haven't we? We tackled what the rent-a-room scheme is all about, who can participate, that all-important £7,500 threshold, and those 2 different methods for figuring out your tax liability, Method A and Method B, for those who need a quick refresher.
Don't forget those fascinating case studies from the HMRC manual. Leonardo, Florence. Who knew tax examples could be so interesting?
And, of course, Judy, Pat, and Josephine, who taught us a thing or two about shared housing and those all-important residency rules. We've also highlighted those crucial caveats that could trip you up. So hopefully our listeners are feeling empowered and ready to tackle their own rent-a-room journey.
Absolutely. We always encourage our listeners to be proactive, to arm themselves with information. Those HMRC manuals might not be the most exciting reads, but they're packed with valuable insights that can save you time, money, and maybe even a headache or 2.
Couldn't have said it better myself. Knowledge is power, after all. So to our listeners out there, remember, those HMRC manuals are your friends, or at least your trusty guidebooks to tax-savvy success. And hey, if those manuals ever start to feel a bit overwhelming, don't hesitate to call in reinforcements. A tax professional can help you decode everything and make sure you're maximizing the benefits of this scheme.
It's like having a personal tax Sherpa.
Exactly. So until next time, happy renting, everyone.